2013 A level, question number 3, part 2. Sunimal started a trading business on 1st of January 2013. So we have the transactions for January 2013. Right? There are 9 transactions. Additional information. All cash transactions of the business were carried out through a bank account. Balance of the bank statement of the business did not agree with the cash book balance due to following reasons. There is a direct deposit, bank charges, out of the checks issued, 20,000 not presented, unpresented check. Property, plant and equipment depreciated at 10% per annum. 10% provision for doubtful debt to be made on the month end balances of debtors. Required using the accounting equation show the impact of the above transactions number 1 to 9 with the values and state whether each of the value increase or decrease in front of the value. Use the following format. And so draw the format. Then number 2, calculate the bank statement balance and the adjusted balance of the cash book as at 31st March 2013 using the above bank column. Then they ask the income statement of Sunimal's business for the month ending 31st January. So first let's draw the format for the accounting equation. Number 1. Right. So draw the format. Transaction number 1. Transaction number 1. 1st of January 2013, Sunimal invested 400,000 cash and a van worth of 840,000 in the business. So motor vehicle will increase by 400. Motor vehicle will increase by 840. Motor vehicle increase by 840 and the bank balance will increase by 400. Equity will increase by 1,240. So that's the entry for the investment of cash and the van. Motor vehicle increase, bank increase, equity increase. Then transaction number 2, bought furniture and fittings worth of 240. So bank balance will reduce by 240. Furniture will increase by 240. Furniture will increase by 240. Right? So number 3, 8th of January, purchased goods worth of 100,000 and issued a check for the full amount. So cash, the bank balance will reduce and the inventory will increase by 100. Inventory will increase by 100. It's a purchase of goods worth of 100 and issuing a check for full amount. There is a question. Isn't issuing a check is a liability? No, issuing a check is considered as a cash or cash purchase. Right? Either you pay through cash or bank or check. It is a cash purchase. It's not a credit because already it's paid. When you give the check, it's already paid. So it is not a liability. It is a cash payment. It's a cash payment. Number 4. The goods costing 80,000 was sold for 130 and received a check for this amount. Inventory will reduce by 80, sold for 130 and received a check of 130. So if you receive the check, the bank balance will increase. It's not a credit sales, it's a cash sales. Then the equity will increase by 50. It will increase by 50. Right? Number 5. Purchase goods worth of 150 for credit. Now this is a credit sales, credit purchase. Inventory increase, equity or sorry, liability increase by 150. It's a credit purchase. Credit purchases. Inventory increase and the liability will increase. Number 6. Goods costing 140 was sold for 200 on credit. Now this is a credit sales. Goods costing 140. So inventory will reduce by 140. Sold for 200. Debtors will increase by 200. And the profit will increase by 60. Profit will increase by 60. 140 worth of stock sold for 200 on credit. So the profit will be 60. 7. Issuing a check amounting to 90,000 to settle part of the amount due to creditor and received a discount 5,000. Check is 90, so 90,000 bank will reduce. And there is a discount received. Discount received is an income, 5,000. So that liability will reduce by 95,000. So 95,000 was settled by paying 90,000 and discount is 5,000. 85,000 is not the bank because they are saying check amount into 90,000. So check amount is 90 means we have to deduct the bank 90. That's the check amount. Right. So next, number 8. Paid operating expenses 90,000. So bank will reduce 90,000. Equity will reduce by 90,000. Paid operating expenses. Payment of operating expenses. Then finally, we have the transaction received 150 from the debtors and this amount was deposited in the bank. So debtors will reduce by 150. The bank balance will increase by 150. So they ask only to record these transactions in the accounting equation. This is number one. Then if you calculate the total, you have these balances, total balance. In part 2, calculate the bank statement balance and the adjusted balance of the cash book as at 31st March 2013 using the balance in the above bank column. So what we can do is we can prepare an adjusted bank account. We can prepare an adjusted bank account and a bank reconciliation statement. Right? So we can draw bank reconciliation statement and an adjusted cash account. A simple revised cash control account and bank reconciliation statement. Right. So there is a balance brought forward of 160, the opening balance. Oh, this is the closing balance of the bank, 160. There is a question, what about depreciation? Depreciation you don't need to do in the accounting equation because they ask only 9 transactions in the equation. So we are not recording the accounting depreciation in the accounting equation. Right. Now let's do the bank reconciliation statement and the revised cash control account. are the transactions we have. Balance of the bank statement did not agree with the cash book balance due to the following reasons. A check for 30,000 directly deposited in the bank by a debtor has not been recorded in the cash book. So we need to record direct deposit. Direct deposit is 30,000. That will increase the cash account, cash balance, or the bank balance in our books. Bank charges that will be credited. It's a payment, 2,000. Out of the checks issued to creditors, 20,000 has not been presented. So unpresented check is 20,000. Unpresented check is 20,000. So there is only one unpresented check. There is no more transactions. We can balance this. Total debit is 190. Balance carried down. 190 minus 2,000 is 188. So total or the balance as per the bank statement is 208. Yeah. So we will do the bank reconciliation statement in our next classes because we have done up to the prime entry books. Yeah, we just started the prime entry books. The bank reconciliation is under uh, this chapter, prime entry books chapter, chapter 4. There is another question. How will the depreciation affect the accounting equation? Depreciation will be deducted from the motor vehicle and furniture minus, and equity will be minus. It is expense, is an expense. Right, so we have so in the chapter 4, we just started chapter 4 prime entry books. So there we will learn these topics. Now this month, by end of this month, we will be learning all these topics, including the past papers and also some other professional courses questions. Like the source documents, we just started with the source documents, right? Then the cash receipt payment, petty cash, bank rec, purchases journal, return outward, sales general journal, control accounts, trial balance, error corrections, and suspense accounts. So this chapter we just started. So during January, we will cover the entire chapter, right? Income statement of Sunimal's business. So let's prepare an income statement, something similar to this. income statement for the month ended 31st January. This is 31st January 2030. Right. So you can draw a very basic income statement. Right. So let's record the entries into the income statement. Sales, we had cash sales and a credit sales. These two. Two sales. Right? There was a cash sales 130 cash sales plus there is a credit sales of 200. So total sales 330. Total sales 330. Nice thing. Okay. So next, opening stock here, there is no opening stock. Purchases 100, 150. So total purchases 250. And there is no closing stock. There is a closing stock of 30. There is a closing stock of 30. That means cost of sales is 220. Cost of sales is 220, which gives the gross profit 110. Gross profit is 110. There is no other income, but there are some expenses. So what are the expenses? This 90,000, which is an expense. 90,000 is expense. This 5,000 is, it is discount. So that is considered as other income. Sorry, there is another other income of 5,000. Okay. This 50 and 60 only we calculated gross profit. 50,000 and 60,000 is the gross profit. Okay, so here the gross profit comes as 110 because of these two, 50,000 and 60,000. Then other income, discount received 5,000, and the 90,000 is operating expense. 90,000. Right. So income expenses we have to take from here in the equity column. Right. So other than this, there are some other transactions. There is a bank charge of 2,000. So that is considered as expense. Bank charges 2,000. You have to separately take as expense. Bank charges. Then we also have to consider the depreciation. Now, in the accounting equation, they are not asking us to calculate the depreciation, but now you have to calculate the depreciation and also the doubtful debt. So PPE is to be depreciated 10% per annum on the cost. So there are two more PPE, two fixed assets, motor vehicle and furniture and fittings, both 1st of January. So only 1 month we have to depreciate at 10%. So motor vehicle depreciation 840 into 10% into 1/12. Furniture and fittings depreciation 240 into 10% into 1/12. 7,000. 2,000. 7,000 and 2,000. And also there is a 10% provision for doubtful debt. Doubtful debt. Now let's see how much is the debtors. There is a balance in the debtors account 50,000. There is a balance in the debtors account 50,000, and a direct deposit is given. A direct deposit is given, which was not recorded in the accounting equation. 30,000. Therefore, the debtor balance is 20. Debtor balance is 20. So out of 20, we have to calculate 20 into 10%. 10%, right? 10%, yes. So 20 into 10% is 2,000. So Those are the balances. Income is 5,000. Expenses minus 103. So net profit is 12,000. Yes. Why should we deduct 30? Because there is a direct deposit which is not recorded in the accounting equation. This direct deposit is not here. That's why we have to deduct. So we get the net profit as 12,000.